All right, folks, we're live on YouTube, so I have to stop the music, or else you get a copyright strike and demonetized. So we don't want that, or I'd let the music roll. So call your content creators and ask them to remove their copyrights. That's the only way we could continue to play music. So I will open the chat up to everyone, though, because I know someone's going to ask about that. All right. Chat's open. Chris will be here soon. We're live on YouTube right here. This is the link. Go like the video and drop a comment. Trying to grow our social presence. So, all right, guys. Chris will be on very shortly.
Hello, everybody. Welcome back. Happy Thursday. Just after 9 o'clock, we had inflation news today, and big surprise to the downside. Markets are kind of loving it this morning. We've got some pretty big gaps to note. Looking at the heat map from yesterday, we're about 59% of the market was down. We're getting a big lift in futures, big lift in Mag 7. Looks like tech might make a comeback. This will be a really interesting day, and obviously today, tomorrow, kind of the make or break going into this major expiration. Look, here's the deal. I have a couple of trades I want to talk about today. Let me share my screen before I forget. And let's get the chat up and running. Say good morning to everybody. We had a nice masterclass yesterday for daily profit play. I had some fun doing a waterfall presentation. I'll sprinkle in a masterclass next week, Monday or Tuesday, for another waterfall income class. This is a trade I talked about in Build a Trade yesterday with Nate and Kane. I wanted to discuss potentially a little cheap end of year rally trade, maybe between the 69 to 7,000 handle and possibly down here towards the lows around 6,500 or so. It would be a butterfly spread. I want to see how wide we can go and maybe how cheap we can get it and what our kind of asymmetry would be. The timing of this would be somewhat delicate, but if I did a December 31st expiration, look, if we have a move to the upside, right now we have futures up 0.8%. This gap is only getting bigger. We are 5 of 6 days that the markets have not stayed within the expected range. The plus minus on the day for CPI was actually quite low. I wouldn't be surprised if we see some follow through and some more direction. Look at this thing for SPX today. So SPX today, let's go. So we have a plus minus 5209. That's quite high. 5209, and that is Thursday. Okay. We've got gamma levels that are pretty wide. We'll take a look at that in a moment. What I was thinking of is so Bill, the broken wing butterfly trades, the broken wing butterflies were the ones that filled. So I had 2 broken wings filled for 20 cents and $2. Those were, I mean, look, if you read my notes yesterday, very challenging day. Anytime I say this for 0 DTE, when we finish literally at the lows or we finish literally at the highs, that's a very difficult day for defense unless you are sitting there at those highs and lows calculating those traps. Okay. So, in truth, I said this during the masterclass yesterday. If we had a push even lower, if we went to 67.15 or 67.10, the bigger trap we had was actually on an iron butterfly that was going to pay like $450. But it didn't go low enough, went to 22. But I got filled on this 20-cent broken wing and a $2 broken wing. They were the same trades. Like, they were the same contracts. They were the same strikes. I just did 1 for 20 and 1 for 2. And then that would be my 5 wide spread. That was a 25 pin price. But this is the most important thing for my recap yesterday. Very difficult close on the VIX, with literally the VIX rallying up into the close. VIX hit a high of 17.98. That was our calculated, 1.11, 1.12. That's our VIX box. That's our daily profit indicator. That's what we do every single day. It ran up into that level at the close, which means we're getting the VIX at the high of the day at the very end of the day. We're getting the push to the low of the day at the very end of the day. The only way that defense trade works is if you're in that profit trap area. So, our threat was below 67.45. And if we didn't get back above 45, we lost on our daily profit play, which was right here. So the only thing I had to help was defense trades between like the 6,700 and 6,730 zone. So the fact that we had a close at 22 yesterday or 21 yesterday helped me get into some of those profit trap areas and get filled on some of those credit levels, which my broken wing butterflies, by the way, weren't threatened until 67.10. So the $2.20 I collected on those butterflies, my strike was 67.10. The trap that we put on for the iron fly, that was a 14.45 credit. I lost in that trade. So, net, actually, I mean, I can look and see what my exact P&L was on the day. I did not actually, you know what? I think I did finish flat for the day, because I would have lost $55. That's my fault. Let me update this. So I would have been here, and then the iron fly defense entry was 14.55 credit, and my would be closed for $15 debit, which would be a net 55-cent loss. So net on the day, I'm going to say down $15. I forgot about that $55 risk. So net profit negative 15 cents in the day. In all honesty, though, rather than losing $455, I walked away with minus 15. It's like, I'll take that as a thank you for not having a normal, like, full size loss in the day. Okay, but everything else rings true with, like, this is 5 of 6 days. where prices have gone more than you expect to move. I do think this will continue to happen through the holidays. Now we can switch gears all of a sudden, and it's like, oh, let's do inverse iron condors. We talked about that in some of those previous daily profit play master classes. Yeah, I mean, okay, so if you can get $6 and risk four, it's like it's the same trade. You just need price to move. But now a day that has like a plus or minus 52, you're gonna have to have a much wider dead zone. So it's like I'm not gonna flip to like, well, we got to go 30, 40 wide and hope it goes 50 plus points. It's like I'm just gonna trade. It's like I don't mind like having my core levels, my 10 deltas, and having a defense trade, but it is proving to be a lot of work. Okay. It's proven to be a lot of work. Yeah, but my credit was 1445, wasn't it? Oh yeah, sorry, it's 40. I got 45 credit. Somebody else got 55 credit in the master class. This is a. It was 1445. This is also cancel that. I got 1445 credit. Yeah, there we go. So I lost $55 in that trade and the $4 on the daily profit play, but my traps here 440. So I end up netting a small loss on the day. But like honestly, to lose the day and feel really good about it, it's hard to do, but I do feel good about it. The fact is, like, that's a very recoverable day for sure. It's just it was a hard defense trade. And if it wasn't for like the 67.10 strike on the butterflies, or like a 67.25 pin price on a butterfly that gave me about $220, like that's the only thing that was good for me yesterday. Anyway, it is what it is. Look at how wide the gamma is. We're getting some big gaps to the upside. Positive, negative gamma pivot point 67.60. That is 6% higher or 0.6% higher. We're gapping up to 0.8. We are literally going to gap up into positive gamma. Okay. Now, here is what I think matters for the end of the year. If we see price action today stable here and possibly rallying back up to 6,800, today, tomorrow, I think we do have a potential like year-end rally. I think this rally isn't dead. Okay. If the VIX gets absolutely smoked to the downside, I'm going to set some chart alarms today. Does the VIX come back down to like 15.8? Because if it does, that actually could be pretty encouraging that the market does have a melt up into the year. So what I wanted to look at is how cheap would it be to cast a trap around the December 31st. I want to build this out on option strat. So we have some broken wing butterflies that were filled. We'll keep an eye on those trades. I have these in. These are bonus trades we talked about. I put these in and label them as year-end rallies. So this butterfly needs to get back above 67.95. This butterfly needs to get back above 67.65, which honestly, today, if we have a decent pushback to 6,800, this one might show some encouraging signs of taking some profit. Okay, so we've got up to $4 profit there on those butterflies if we're back above 6,800 by end of year. What I'm looking at is maybe a trap between like 6,900 to 7,000 and maybe pin that baby at 6,950. I say that because there is, let me see if I can find this on Tanuki Trade. Let's go out to the end of the year, December 31st. Okay, and I want you to see where some of this major gamma is. This gamma right here, this is the JP Morgan collar trade. This is the pin at 7,000. Between 6,850 and 7,000, like if we can get back above 6,800, I think we can kind of ignite this rally. We start clearing these hurdles out. It is a lot of positive gamma into that 7,000 strike. Now, I don't think we necessarily like go through that, but I think if we make an attempt to get it there, what I'm looking at is maybe I could cast a butterfly trap for us between 7,000 and let's say 6,900. So I don't know how much this is going to cost, okay? But if I did a 6,950, okay, 6,950 by 7,000 by 6,900, I know that seems wide. I'm curious what it's going to cost me. Maybe more than I want to pay, to be honest, but I'll find out. Because if it's cheap enough, I might throw a little butterfly spread in. It's not a ton of time on this trade. So let's look at it. So if I go December 31st and I buy the 69, come on, options chain. Give this a second to fill in, I guess. Exception occurred. Let me just log out, log back in. There we go. I had a feeling that was going to happen. There we go. Okay, so if I buy the 69, Sell the 6950 with 2 contracts, and then sell or buy the 7,000. Um, I mean, it's a little riskier than I want it to be. You're risking $500, but you could potentially make $4,400, which obviously is the pin price. What I want to see if I build this thing out. Let's go option strat. Let's build this out as a long call butterfly. SPX December 31st. Pin this bad boy at, so I buy the 69. I sell the 6950 and I buy the 7,000. That'd be an equidistant butterfly. This is what the range looks like here. So, $500 risk for potentially a $4,000 profit trap. Now, time-wise is what is most important. Okay, let's say that we get a year-end rally. If we get a year-end rally, all we need price to really do is go higher. If price goes higher, that $500 can probably return 20-30% gain. Okay. The hard part is if I do this two ways, if I do this up to a like 7,000 rally, or I do this down to like a 6,500 rally or fall rather, I don't know if the profit will be enough to justify taking both trades. Is that clear? Because in this trade, if I want to take both sides of this, maybe the put side's way cheaper, right? Or maybe I can tighten this up and go, let's go like 69, 25, 50, and 75. Something like that. Well, now it costs me $125 to make potentially $2,000. Maybe return on capital. Let's go like Christmas Day. So, trading is open on the 24th. I think markets are open until noon or 1 o'clock Eastern time. So 24th, when the market closes, if we're, above 6850, if we're above 6900, we can make over 100% on that trade there well before expiration. Let's say we hit into our profit trap around 6950. I mean, if it's early in the game here, it's like we're not going to make this big fat profit trap. If it gets, we'd have to go through the New Year's Eve, kind of New Year's Eve. Yeah, I mean, that's a hard part about butterflies is like all the beautiful profit trap starts to fill up like right around expiration. So if my expiration is the 31st, you can see like the 30th and the 31st when the markets are open, that's when my trap is valid. So, I mean, I have a 50-point trap where I'm going 25 wide. It's not a huge net, to be honest. So I guess if I went a little bit wider here, I mean, could I take this trade for less than, see, that'd be 30 and 30. I mean, for less than $200, I've got a profit trap that for $200 max risk, 185 max risk, and I can make $3,000. That's a 60 wide net. That's not awful. I don't know. The tricky part about this trade is that profit trap would be great, but that's talking about we're pinning this thing literally on the 30th or 31st to make any real money. Like if we want to make big money, it's going to be pinning this thing on like the 30th inside like the 69 to 69.50 zone. Then we can make, almost 300%. It's not terrible. So let me just throw this out there hypothetically. If I did 69, 20, 50, and 80, that's a 30 wide equidistant butterfly. That would be basically a 60-point net. Okay. Now the net is a lot wider if there's time left in the trade. Like if we instantly rally up to 68.50, instantly rally like by next week we're up to 6,900, we're going to see some profit in this trade. My concern is that we see profit in this trade, and if I do this on the upside around that 69.50 pin, and I do this at the 65.20 pin, I mean, if I want to make this cheaper, I pin 7,000. Maybe I can go 50 wide and 50 wide here. Let's see. So if I go 69.50, 7,000, 70.50, it costs me $300, but look at my profit trap, up to $4,700. So max loss at 287. The net gets a little bit wider. So if we go up, we've got some pretty good profit opportunity. I don't mind this trade. I mean, what do we need to see happen? I need to see price make a pretty decent attempt to get into like 68.50, 6,900 and start to give us at least a year-end rally. If we get back to 6,900, we can turn a 287 risk into maybe a, $500 to $550 profit. And I'd be happy with that. All right. So that's one. All right. I'm going to write this down. 69. This is a potential trade. Okay. So 69.50 by 7,000 by 70.50. Now the reality is I probably should put the trap around like 60 like this, maybe throwing it out here like 25. If I can get those strikes, this would be now 25 here. So that cost me another $100. Still have a similar profit trap. Could still make some decent money. That way, if we at least try, like get an attempt to get to 7,000 or 69 plus, this does pay pretty well. We can probably turn a 387 risk into maybe a 100% gain as we get closer to expiration. Let's go Christmas Eve when the market's open again. If we're up to 68.50 or 6,900, that's a pretty good chunk. You'll be up like 130, 150%. You get closer like New Year's time. Now it gets a little bit more interesting, right? If we're in New Year's time, the left and right side of the butterfly get a little bit narrower. But if we're closer to that 6,900, 6,925, we're hitting all-time highs. 387 turns into maybe $1,000+. So the question for me is like, how wide do I want to go? How much do I want to spend? I'm risking 300. Okay, I'm risking 300 on those broken wing butterflies we did. So this one offers a bit more profit potential. But what I want to do is maybe consider this as a combo in case we go up or down. Could I get a decent profit trap on one of these scenarios? So I'm going to add in. I'm going to go all puts. So I'll buy a put, and I will sell a put, and I will buy a put. And let's throw this one out there. So the put side is going to go down towards the 65.20 zone. So if we put the put side, let's say at 65.50 and go 50 wide here. So 66 and 65. So 65.50, 6,600. There's my other butterfly. And I sell two. There we go. So this one, wow. Looks like the debit only cost me like $160. $160 debit to potentially make $6,000. That would be pretty wild. This is the trade in full. All right. Now look, and I'm just throwing this out there. Like this is a potential trade. If we are going to go somewhere at the end of the year, question is, are we going to try to sneak up to 7,000? Or are we going to dump back down to those major October 10th and November 20th lows, which is around 65.20, right? So if I pin the 50 or I pin the, nearly 7,000, if the market goes one way or the other for a max risk of $540, I could potentially make, and in this case, I can make like $4,500, about $4,500. It's not bad. Like, so that's a profit trap, but the profit trap comes at 12/31 expiration. So if we're spot on the day of expiration, that's a great trade. The issue is if it happens like Christmas Eve and we have a week to go in the trade, look at the fills. If we're at either 65.50 or we're at 69.50 by Christmas Eve, okay, we're barely covering the cost of our debits. If I do both sides of this trade, I'm not really covering the cost of my entire position. That is enough for me to say, it's probably not worth it. It's probably not worth it. I like the trade. I literally, as I was at the gym like 2 hours last night, I'm like, I like this trade. I want to price this out for tomorrow. Now it's time to price it out. But there's a big fat dead zone in the middle. I could be a bit more cost effective. Here's what I will say. So how many of you are in those broken wing butterflies with me? How many of you are in those bonus trades with me where all we need to see is price be back above 6,800? Okay. So if we set a chart alarm here, I'm going to put a chart alarm back at 6,800. That's one of my strikes. Okay. I'm going to set a chart alarm back up here towards 6,900 and let's go after 7,000. Now for fun, we can hypothetically say like, yeah, we could have taken those. We could take the trade. However, what I think I'm going to do is we have a butterfly. I'll put it in black. So we have a butterfly that we need price to be back over 68. We did one around the 67.60 zone. Okay. I'm going to put another trade on down here. That's going to be a similar broken wing butterfly structure where I want $2 credit. This one I'm going to do with 2 to 3 contracts. Okay. And this is either going to be like the low area or this area as well for a slightly bigger trade, and maybe even going out to like the first or second week of January. Okay. I mean, I think that inflation being a pretty surprising print to the downside, if the market likes it and runs with it, I will put this trade in as a pending order depending on how today settles. Because if today is up, I don't think we're going to get filled on these trades. If today is up, we have a year-end rally. We should win on this trade. We should win on this trade into the end of the year. Even if we're going to make, we've pulled in $2. Even when we pull out $100 on each one, I'm still happy with that as a net result. Right? Grab a couple $100 for the holidays. Starbucks with family on that bonus trade, and maybe some nice breakfast, and then maybe we don't have to worry about these trades. Okay. So as far as the butterfly spreads, I was thinking I could throw a pretty decent net out there. I still like the concept, but the timing of this is going to be the trickiest, because if I do an expiration on the 31st, yes, we can make some money, but I feel like you got to pick a side. Does this make sense? I feel like you got to pick a side, either to be bearish or be bullish, and you don't really know what's going to happen. But I would like to think that the market is going to somehow have an effort to get back to these highs. So I think if you pick a side, this is a great trade. If you want to go both ways, it's not going to pay enough unless you time it perfectly, like the 30th or 31st, and then it's a big fat profit trap. But that is so difficult to do. But a wide trap, if I did like I have here, the 69.25, 69.75, and 60 or 70.25. So I'll just, so let me remove this one, remove this one, remove this one. If this is all we did here, and we have the trade today, right? And let's say the market rallies back up to the highs at 6,900. For a $387 risk, you can probably see about $400 to $500 of profit. And all we need price to do in the next couple of days is start moving up, right? So if we go out to Friday's expiration, end of the day, we go out to next week on Monday when we start trading again. If we're up to 68.50 or up to 6,900, this is a pretty good trade. And even though we're pinned at 69.75, we have all this room from 6,800 all the way up to 7,000 plus. Okay. Do I want to risk 387 on that trade? Not necessarily. Honestly, not necessarily. So let me do one thing. Let's go back up here. Let's maybe go 7,000 pin to go further out of the money. And let's see if we can go maybe 50 and 50. So that way for 287, if we're at 68, 68.50, I mean, if we're at 68.50, we should be able to make over 100% on this trade. If we're at 6,900, we should make almost 200% on the trade. If we're at 69, I mean, this is early in the expiration. So this is out to next Monday. If we start getting a decent rally through Christmas Eve, 68.50, 6,900, we've seen the high at 69. We should be able to, double our money here or close to it. Does that make sense? So if I took this trade, 69.50, 7,000, 70.50, then, I'm risking maximum about $300, but my potential profit of, if we get back to 6,900 highs, we should see at least 100% on this trade, at least, hopefully more, right? If we break to all-time highs, we're going to see, probably 125, 150%. And that doesn't have to be perfect timing and take this all the way to expiration. Okay. So when this goes live this morning in about 1 minute, I want to price that trade out. Okay. So that would be, and it's way up here. So let's go back to today. Let's take a look. All right. So we got a plus or minus 58.93 on the morning. What did I write down earlier today? 52.09. So our well, that just swapped. All right. So our plus minus was 34. It went up to 58. I just saw that before the open. Now we're at like 33 points. We'll see. Let's get some gamma this morning. We had a huge gap to the upside. Look at that big fat open. Okay, I got a screenshot of this. This was yesterday. Let me recenter this thing at the close, which was around 67.21. 67.21. Look at a top and a bottom today. Plus or minus, we had I saw it up to 58 pre-market. So we have between 52 and 58 was the plus minus on the day. And this market might just have, one of the bigger comebacks that we've seen in a while. All of this like slow, grindy structure to the downside can just immediately be popped to the upside with a big jump in futures. Now, if we go here, let's say that price action today, breaks the structure, takes out these levels, and then we come back and retest. Well, if we are going to go into the end of the year, 6,900 seems doable. Let me price out that trade that I just talked about. Okay. And it might be more expensive now because we just gapped up like 0.8%. SPY's already up 1%, by the way. Futures up over 1%, by the way. Just like that. So this market like couldn't wait to jump in. A 0.84% gap, and we've already ripped up from, we've already ripped up 20 points in a minute. So I don't know, be a little cautious today. We should wait to wash through the new. I mean, the price action for the news. So look, CPI was really optimistic today, meaning like the forecast was like 3%. It came in 2.7. So that was a huge improvement as far as the inflation numbers go. I'll go to economic calendar here. Today is Thursday. Here's our news and expectations. So CPI, so we forecasted 3% year-over-year CPI. That's core CPI, which is a kind of the primary level. Of course, that excludes food and energy, but 2.6 instead of 3%. And then year-over-year was 3.1. Previous was 3%. They forecasted a 0.1% higher, came in 2.7. I mean, again, whether this is government shutdown, deflation, or this is just all the lagging data finally starting to take effect, it's one of the first CPI prints we've had in a while that is showing like, oh, okay, so inflation isn't just running away and just staying out of control, right? So at least for right now, it's a short term boost for the markets, building some optimism. It gives the Fed more room to stay restrictive, and they can focus on like cutting for the labor market versus worrying about stickier to higher inflation. So I mean, for right now, the market's taking it in a positive way. Now, I do think it's important to let today kind of settle, because what happens, I'm telling you, this is going to be key. If we don't take out this high and we have a gap up today that ultimately fades right back down, we're in trouble. In my opinion, we'd be in trouble. Okay. But if we can, gap up here and stay here, take out this recent high, then the holiday rally, I think, is on. And that would bring us into next week. Yep. So it absolutely is a huge jump at the open. Let's see if we take out these recent highs around 68.12. Okay. Gamma levels, VIX is falling. I put a chart alarm down here at 15.85. We can use, kind of this morning's VIX, but if it's going lower, like we should be able to call the top around like 16.63, which is right here with this gap open. So I'll go 16.6 VIX, which is going to be just over 1.03%. I mean, we're already there. That's what's crazy. It's like, so we're forecasting that the gap open plus another 1%. If we're going to try to call a top today, it's like you got to take the gap open plus the 1% move from a 16.6 VIX. Okay. All right. So we'll do the numbers here in just a moment. I'm as curious as everyone else, like, what does the day bring us? Plus or minus 30 on the day. Let's go this way. If I did a 9 delta, I mean, it's 9 or 12. If I do 9 delta here, 70 cents. We talked about this one yesterday. If I was going to do like the expected move and the expected move, if this trade fills for like maybe 250, which maybe it does, maybe it doesn't. I just think there's going to be a lot of moving and shaking this morning. I mean, that's moving about 60 points higher and about 60 points lower. Plus or minus is 30. But I'm not going to take that trade for $1.70. It's like I would take this trade for, $2 or $2.50, which means price still has to come to me. Right? Okay. So again, no reason to force a trade. I like the trade at the expected move if I'm getting 250. I don't know if that's going to fill or not. Or you wait for $1 to go 10 deltas. So the 68.40, 45 on the upside, maybe 67.15 or 67.10 on the downside, but ask for $1 That's a pretty good fill. Should be a good profit. Risk four to make one. I mean, we're looking at 100. I mean, that's over, what is that? 70 points to the downside and over 60 points to the upside. And that's based on the gap up plus whatever movement we have through the day, which would be another like double the expected move. Right? Okay. So let me see if this one will work. I'm going to go. Let's see. I mean, yesterday was such a grind. I do have to. I'm not going to be able to, trade all day. I'm running to the airport to pick up some family in the next hour or so. So I really don't want to have a day like yesterday where it's like I was micromanaging the trades. I was putting on some trap trades. It's like I don't have the luxury of being at the computer as much as I was yesterday. And also we're traveling at 6 a.m. tomorrow. So probably could just watch price today. Anyway, I'm curious. I'm just going to write this one down. If it offers for $1, I'll keep an eye on it. And I want to price out that butterfly. So on the, did I do this backwards? No. So I did the 40 by 45. Okay. So 68, 40 by 45. And the 67.15 by 67.10. Okay. So if that one fills for $1, we're at 85. That's 50 points higher. Maybe here's some for some follow through. That's delta neutral. That's about a 9-10 delta right now. Let's see. Let me see what my gamma levels are before I just start throwing trades in. So big resistance around 68.10, and my strikes are up to 40. So I'll put this trade in for $1. I don't think this is a bad area. It's like you're trading low deltas, should be a decent probability of profit, but price has to come to us. So I'll put it in for $1. It'll be a pending order. Okay, so that's coming in for daily profit play members in about 30 seconds. New trade, pending SPX. Today is the 18th. Okay, pending order. Trades in. Yep, I'll calculate that in just a moment. Let's look at that December 31st. If I went all the way up to 69, so 69.50, or I go, I think I was looking at the pin at 75. So 50 to 75 to 7,000. I mean, ideally, it's like the profit trap should be around the 7,000 handle. That's kind of the cheapest way for me to do it. So if I build this out, I mean, this trade's not freaking expensive. Like for $100, a profit trap gives me, almost $2,400. Like that's to me, a pretty interesting trade. I'm not going super wide, however. Like if I go to, let's go 25 and then to 25 here, it's like now it costs way more money. So obviously I'm not super keen on like, let's take a huge risk. If I went 50, 75, and 7,000 for $1, I'll take that trade. Okay, let me build that one out. And then I'll probably take that trade. So if we go, what were my strikes? 50, 75, and 7,000. So 50, 75, and 7,000. If we get to 68.50, get to 6,900, like if we hit the highs again at 6,900, we're doubling our money. Or I should say we're making at least 100%. I'll take this trade. Let me see if I can get this thing for 95 cents debit. I risk $100. I'm looking to make $150 to $200 on the trade. Let's see. So a 95 debit's not filling. Let's try for $1. You turd. Hopefully $1.05 will fill. All right, trades in for $1.05. So this one's going to go into, let me go photo, bonus trades. Both 31 expiration. I'm buying the 69.50, 69.50 call, selling the 69.75 call, and buying the 7,000 call. So it's equidistant. $1.05 debit. So max risk, $1.05. Max profit would be 23.95. If SPX rallies back to 6,900 or higher, this trade should offer 100% or more profit. I'll look for, let's say, like $2 to $3 credit on the minimum for profit. And if you want to get lucky on the timing and the profit trap, wait and see how December 30th and 31st look with price action. Okay, so if we get a quick run up to 6,900, 6,950, I might just take the profit. It's easy. It's easy money. Take the profit. If you want to get a little bit riskier, one way to do this is you can take two contracts, risk $210, and take one trade off for profit and cover the cost of your trade, and then let the other one run and see if that profit trap is going to be a big fat winner. Okay, I just posted it here in Telegram. You watch me type it live. This is in my public Telegram. Okay, so that trade looks like this. I can't slide this over. Well, what's kind of this is like my favorite part is like the butterfly trade. If we just get price going higher, let's say we get back to like, yeah, I mean, if we're moving early in and price is going to rally, because price right now is at what, 67, 71. Are we fading a little bit? Just a little bit. Don't fill this gap, man. If we fill this gap, like I don't have any confidence that this market's going to be getting to a year-end rally. We will see. Today's going to be an interesting day. But what I was going to show on the build out trade here is if we get a rally to 6,900, we should at least make 100%. So if we get back to the recent all-time highs at 69.01, that was post-Fed, we make 100% on a trade. Okay, and that's early. Like that'd be, by Monday next week, right? If we're at 6,900, we'll make $120. It's like that's 110, 20, 30%. Not bad, right? We get to 69.50 zone, like a little bit more profit. If we go into Christmas Eve, right? Christmas Eve, the markets are open. Christmas Day, the markets are not. There's a bit more profit there, not a ton. We get through the end of the week, which is the 26th. What's closing bell at the 26th? Closing bell 26th. A little bit more profit in that 6,900 zone. 6,900, we're up like, what is that? 150%? Not bad. And then all the magic is going to happen like the following week around, the 30th and 31st. Now that gets narrower, we need it to be like getting closer and closer to our traps. But I'd say if we go into the week of whatever the 29th is, the week of the 29th, if we're at 6,900 or higher, I think we should just take profit. Because all it's going to do is make the trap tighter and tighter and tighter and tighter. Yes, the profit is there, but the timing is going to be very difficult. So I think if we get a $1.05 debit and we can get, 210, 250, $3 credit, I just take the profit. Okay. All right. Let's look at the VIX. So I'm going to calculate my defense trade right now is going to be based on this earlier VIX, which is around 8 o'clock. That VIX high was around 1745. Okay, like another 1.1% move. Let's take the gap. And this is the scary part about today. I don't know, man. I just think that the market's going to be very, very difficult to kind of predict and pin. These gamma levels are all over the place. If you go back to live gamma for today, I mean, we need price to stay above 67.60. That's our kind of positive negative gamma pivot point. We're above that right now, so positive gamma is still kicking in. I see the strikes around 68 to 68.10. So if we get there directionally, it's like that would be where I'm looking for prices to head higher. To the downside, we come right back down to negative gamma, 67.50. So as far as having some support in the market, 67.50 should hold as support. Some resistance, we run into some walls around like 68, 68.05, 68.10. Okay. And that would give the market kind of the plus minus 30 to 40 on the day. That kind of keeps us contained if the market's going to stay within expected range. Dave said got filled at 95 cents. Okay. Right now, my working order is trading for 70 cents. So what strikes did you take? Melinda, I agree. That's what I posted yesterday in Telegram. Literally my closing comments yesterday was, this is 5 of 6 trading days where price has gone more than the expected move. This is truly a risky environment to be trading because we are lacking market efficiency. Every trade is about your willingness to risk capital every day. I didn't realize I was redundant there with every day, but every trade is about your willingness to risk capital. And I'll put or not risk capital. So if you don't want to risk anything, then just join and spectate. Okay, there's my pending order for today. So let's see if that gets filled. All right, so let me calculate some highs and lows. We are just shy of our 6,800 gamma level. We're pulling back a little bit, but this is one thing I'd look for this morning. Look for a potential bounce around this structure here and this positive negative gamma. If we bounce off of that, that's an encouraging sign to try to revisit the highs for the day. If not, go higher. So let's see what happens. Okay, so between 67, 60, and 50, if the market offers support there or there and it keeps this kind of rally in check, it's like one thing that can happen today is because of the gap, everything shows green. Everybody's happy. Even though we're watching this gap up and fade this morning, we can still see green on the day, right? And maybe that's kind of enough. So I think the key levels right now is we have to gap, we have to like bounce pretty hard at 67.60 or 67.50 to see if the markets can go back up. All right. So that being said, VIX is starting to rally. I've got a calculation out about 1.1%. I'll set a chart alarm here and see if we take out the highs from yesterday. That was a pretty ugly move on the VIX because it just kept going higher and poking again and poking again. And the end of the day, the VIX was at its highest point, just around the 18 handle. All right. So if that handle breaks, I'm going to have to make that adjustment on where my kind of top or bottom is going to be. All right. So that being said, we got a cheap trade in for the butterfly. I've got a pending order for daily profit play. Now let's talk some maybe defense trades here. Okay. So let's go back to 68. I mean, that would be such a disappointing day if we gap up, run up here, and then we fall, 1.13% back down to freaking fill the gap. That'd be a terrible day. So I'm hoping that we stabilize in here, to be honest. I hope we stabilize in here. Market tries to revisit the highs again. That would be, let's keep this freaking pop and check, right? Let's show some signs of optimism, like use the structure here, fill in the gap. Like price just did this in futures. So if we come back in, I mean, this is intraday technical stuff, but if we took this low, this high, I mean, would it surprise anybody from like a Fibonacci standpoint that if we pulled back to like this, 38250 zone, that the market looks to turn in here and head back up? If we're taking the structure out, if we're breaking, I mean, if we're breaking some trend lines, it's like this should turn. Did the fence trade and butterfly? It helped me wash. I didn't close any of them. They closed for profit at cash settlement. Yep. So they helped me wash the risk. I ended up being down on the day about $15. And honestly, like I'll take that because what I've said for daily profit play is if I can wash away my risk, I consider that a huge win because winning every day is really easy. It's when the market doesn't cooperate that it's nice to come out with a $0 loss, or I lost $15 yesterday. Okay, so I lose 15, and then on my winning days I'm stacking up like 60, 70, $100. That adds up a lot faster than taking a $400 loss. Okay, nice, Randy. 1231 filled for $1. Good. Yeah. So let's see. I mean, chart alarm set at 69. Chart alarm set at 7,000. Our pin price is the 75. We'll see. I mean, that could be a low risk, high reward type trade, which I don't mind. And here we are, like I said, fib wise, low to high, turning off the 382. Do we head back up to the highs again? Sure, maybe. Okay. What could we get for like a 68.50 right now? I'm just curious on just straight up risk. 67.50. If that holds as support, can we get anything decent for this? I mean, I can get over $1. I can risk 4 to make 1 as long as price stays above this expected move to the downside. That's not a bad trade. Could I go 10 wide at a gap fill, 67.20? I'm just playing around with some trades here. So I went 67.20. Now it's taking on a bit more risk than I want. So 20 and 10, I get $1.55 on a risk in $1,800. I think that's a high probability trade. 98% chance of profit. That still doesn't mean squat for 0 DT in case this market turns south. So I wish it ended risk $2,000 for that. So I'm probably not going to take that trade. But the 50 zone, let me try this. What is a broken wing at the 50 handle? 70 cents credit. So if we stay above 50, let's see, could this trade? I'm going to see if I get filled for $1 on this one. I don't know. I think the market likes what it's seeing news wise. We just had its gap up, pull back. This is a 382 fib. I think we go to retest the highs. Let me see. That broken wing's only offering 50 cents right now. Oops. Go a little bit wider. Pull in $1. Maybe this. Get a profit trap. That brings me down to a break even of 67.30, which is right now trading at 17 delta on the puts. I'm my brain's moving 100 miles an hour. I've got the penny in order for daily profit play. That's pretty much all there is to it. So this one is offering some credit. I've got a $1,000 profit trap in case prices kind of break down a little bit. What's this one offering here? This one's not terrible. This one's not terrible. Okay, I'm going to take this trade and see if I get filled for 50 cents. All right, I got an interesting trade running right now. This trade is a 40 by 30 by 10. I'm risking 950, but I have $1,000 profit trap, and my break even is going to be 6719.50. Here's the trade. Everyone can have this if you want it. This really isn't a technical daily profit play trade. Here's what I'm doing. I'll put this in the chat. So this is I'm still waiting for DPP to fill for DPP members. Okay, what I'm going to do is this: SPX 12/18 expiration. I'm buying the 67.40 put, selling the 67.30 put, and buying the 67.10 put for 50 cents credit. Okay. So what do I need to have happen? If SPX is greater than 67.40, keep 50 cents profit. And that's likely something I'm going to hang on to end of day. If SPX is less than 67.40 and let's say 67.40 and even down to like 67.21, I'll put greater than 67.20, we have a profit trap. If SPX is less than 67.10, risk is 950. Max loss. Okay, so I'm risking 950 on the trade to make 50. The likely result is probably making $50 in this trade today, and that's okay. If price gets a little squirrely around the 67.50 handle, I do have a 40 and 30 trap. So the trade looks like this. I have no risk to the upside. So I have no risk to the upside. Let me mark this in yellow. So I have no risk to the upside. I have my profit trap starting here. And then I have my risk kicking in just past the 67.10 handle. And that risk is going to be like 950. So there is what my broke wing butterfly looks like on the charts. So you see what I'm saying? Like you flip my screen. So this would be the pin price at 67.30. The profit trap would start here at 67.40. And the risk would kick in. My break even is going to be 67.20. It's actually just below that by 67.19. So I drew this a little bit off. Here, I'll just build it for you to show you. Does that make sense? So let me build this out right now. Butterfly overlaps at 67.10. It doesn't because my pending put is 67.05. 67.05 is my put, so it doesn't overlap. So I'm doing a trade for today, the 18th. And we're going 67.40 by 30 by 10. There. 40, 30, 10. This shows a credit of, it's like, that's not the credit at all, actually. I wish it was the credit. 67, 40, 30, 10. Yeah, what the heck? Today is the 18th. Let me refresh this. Okay, there we go. That's about right. So 40, 30, 10, I pulled in 50 cents. So here's what the trade looks like. As long as we stay above 67.40, we can make 50 cents. Okay. The pin price is 67.30. Because I have the $10 profit trap, that break even point is going to be down here at 67.19.50. And then I take on some risk below that. My full risk would be if prices below 67.10, which would be an entire gap fill. We'd have to fill the gap at a 1.1% move, which means we're up 1%, and then we fall 1.13%. That would feel like a minor version of the NVIDIA candle on November 20th. I'm hoping that's not going to happen today. So hopefully the net result is a clean $50 and, easy peasy. Obviously, if price goes up for the entire day, then just let it expire for 50 cents. Any questions on that trade? I just put in the chat. There's no overlap, Pete. I just want to make sure that's good for you, right? The daily profit play that I put in was 67.05, so there's no overlap. Okay, and price is heading back up. Our highs were nearly 6,800, so price is heading back up. In fact, we actually are slightly, we're just off the wick. I've got the opening bell marker here, so I think the wick high was 67.96, and we're at 92, almost 93 right now. So to me, that looks pretty good. What was the fill? 50 cents. Oh, shoot, my butt. My fault. Here, let me. Yeah, 50 cents credit. It's filled. And if I wanted to sprinkle in another one, I'm just curious. I'm just playing around with some numbers here. 25 gives me a profit trap. Then I go a little bit more risk here. I could stagger these in, still give me $1,000 profit trap. Break even is down to 67.15. Maybe do. That's a 15 wide profit trap. That's equidistant. Let me go there. That one is an overlap. So that's a 15 wide profit trap. Break even would be 67.05. Okay. I'm just going to put a couple of put traps in here. So if price just stays at 67.90 or gets back above 6,800, we're just going to make $50. I might not get filled at all in daily profit play today. I mean, if we have like a big gusher move to the upside, then maybe. We're still trading at, this is an 8 delta put, even with the markets being up near the intraday highs. So if we get filled on daily profit play, it should be okay. Let's see what happens. All right, I'm going to put a pin in that for right now. I'm heading to the airport here in a little bit. Okay. Let's calculate the top on the day. VIX. We can use the morning high VIX is around 1745. We've got the high here around 17. 1745 is a 1.09% move. Let's run the numbers here. Okay, so start with the gap open. Gap open 1.09, 68.50. That's a 1745 VIX. And to be fair, like maybe be really specific, like a 51, 68.51. So I'm taking the gap open plus my VIX calculation. I'm using this recent high right here at 1745. So I'll move this chart alarm to 1745 and this chart alarm here to the highs yesterday at 18. That way I know if the VIX is going up, I need to make those adjustments. If VIX is going down, we should be able to call the top based on that rally. Okay. And then to the downside, we'll take, this is going to be almost, I'm going to say almost impossible to hit. Anything is impossible. That's why I say it's, nothing is impossible in the markets, but it would be very, 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 very unlikely. If you take the close yesterday and then go 1.1%, we would have to have an absolute dump fest if that's going to be the case. So take the 1.1% here, 66.47. Okay. And again, I know that's a conservative way to calculate it, but you can see like my VIX box based on the center, I take my gap and go up. I take my closing bell and go down. That should keep us kind of within a range, hopefully. Again, I keep going back to like, I'm keeping this tally 5 of 6 days where the expected move has been exceeded. Because we had a pretty big expected move today, I'm hoping that it doesn't deliver that, right? Wouldn't it be nice to know that the market's not going to go 52 points today, but instead it goes 30? And the only thing we didn't do was sell our premium tight enough. but it's okay to have the market freaking calm down for a day. All right. You want it in Telegram? It's not good enough in Zoom, like live in session. If I post in Telegram, it's like the trades. I mean, it's already taken in class here, so it doesn't do me any good to post it as a bonus trade in Telegram, unless you're talking members Telegram. So let me see here. Broken wing, yes. The broken wing butterfly is filled for 95-cent debit. Well, Dave, that's not the right broken wing butterfly because you don't want to get filled. So it's not BWB. Which one filled for 95-cent debit, by the way? I'm guessing that's your 12/31 expiration. Okay, let's make some clarifications. I'm just going to type this in. Can everybody see the chat on the screen, by the way? I don't care if you type in Y's or yeses and it blows up the chat right now. It's like, I want to find out. Okay, that's all I needed. So clarifications. We have a 12/31 expiration. We have an SPX broken wing butterfly, which is a 6,800 pin, right? We have an SPX broken wing butterfly, which is a 67, is it 6765? What was the other one that filled for $2? 6765 pin. Okay, and then I have a SPX butterfly spread with a 6975 pin. Okay, so this trade was filled for $2 credit. This trade was filled. These are the bonus trades I sprinkled in this week. So this is filled for $2 credit, and this one was a $5 debit. I just want to make sure we're on the same page here. Like, these are the trades I've taken this week. These are bonus trades. Everyone has had these if you want to take them. So I'm filled for a $2 credit. I'm risking 3 to make 2. What does price have to do? Stay above 6,800. This one, I'm risking 3 to make 2. What does price have to do? Stay above 67.65. What is this one? 69.75 pin price. That is a wider butterfly. We're going 25 wide, 25 wide. So it's 69.50, 69.75, 6,700 or 7,000. That's risking 105 to make, potentially $23, $24. But ideally, if we get into that rally, we should be able to turn $1.05 into like, $2.10, $2.50, $3 maybe. Turn it in for hopefully 100% gain. Gotcha. Okay, so that's the one I thought you were talking about, Dave. But when you put BWB, that's broken wing butterfly, but the reality is you're trading a butterfly spread. You're trading the butterfly spread, not a broken wing, because your levels are equidistant, right? You're pinning the 69.75 and you're 25 points lower, 25 points higher. That's a butterfly spread. So I get it. All right, just want to make sure we're good on those trades. Okay, so we'll keep an eye on that for today. Let's do this. Based on the opening bell, we have a plus minus at like 33 or 34 points. Let's take the open. If we go 30 some points, that's back around like 67.40. Okay. If I get into a profit trap, my break even is like 20. I mean, we could have I guess if we were going to do like double the expected move again today, like, that would really piss me off, but hopefully that's not the case. Or we go 30 plus points to the upside. We're talking maybe 68. We get to these highs around 68, 10, 15 or so. So I think we just got to, I don't know, just trade with caution. Like it's not, I'm fine risking like a little bit of money here and there, but it's like, there's no crazy contract sizes. Like I'm obviously improvising. Like I've got a daily profit play pending. I'm going to let price come to me. I think the mechanics are good. They're like 8, 9 deltas. They're pretty low deltas. If it gets filled, we should win the trade. What we don't want to see happen today is the market's all excited about this pop to the upside and the market gives it all back. I don't think that's going to be the case. We've had 5 of 6 days beyond the expected move. So what is today? Well, we'll probably be 5 for 7 because the market's probably going to stay within a 30-point range today. If we're from opening bell to closing bell, I would say we're probably going to be within about a 35-point move. If that's the case, great. I'll make my 50 cents in the broken wing. I don't have a profit trap to worry about. And, I got some family time to hang out today. But I will set a chart alarm at 67.40 because if that's hitting, that is going to be the part of my butterfly trap that I'd like to keep an eye on. So let's keep an eye on that, shall we? 40, and then my break even is down to 20. So I don't want to see price hit 20 today. I want to see price either go up and make an easy 50 cents, or if it's going to slowly work its way back down to, maybe get into this gap fill by the end of the day, there's a profit trap from 40 down to 30. And that profit trap is actually pretty fat. It's $1,000 profit trap. All right. Are we good? Okay, good. Also, just got word that my masterclass yesterday from Daily Profit Play is uploading in the classroom. So you see a new timestamp for 12/17, and it'll probably just be me and my purple shirt from yesterday. All right. What else is happening? Anything else you want to take a look at this morning? Got some chart alarms set. Do we, hit 68.10, 68.15? Do we drop down here towards 40? That's where my butterfly trap is at. If it goes, nowhere for the day, which wouldn't be a huge surprise after having so many days. I mean, this is for like every zero DT trade. It's like I haven't seen this many days in a row where the market has gone beyond. So it wouldn't surprise me today if we have like that plus minus 30, 35. And from the open, which is around open at 67.78, let's do the numbers. Let's say we're going to go 35 points. Okay, plus 35. Oops, 6,778 plus 35. So 68.13 highs and 67.43 lows. Hopefully that's accurate. But we're about to find out. Cool. All right. So hopefully a winner on the day is going to be easy little broken wing butterfly, and off we go. By the way, what's that trade offering right now? If I buy, sell, buy, still trading for 50 cents. Okay, we'll see. So I'll keep an eye on these trades. All right, here's the dealio. Before I go, we're going to play a little daily profit play. Couple things. So we have a daily profit play, new masterclass from yesterday is posted in Classroom. Okay. Waterfall income. I've got some new members that joined. New members joins. Masterclass will be next week, Tuesday. Monday is my kid's first birthday. So I'll be here in the morning, but I'm going to be just doing a couple live sessions for the day, but it's birthday time. My fiance's taking the day off, so I'm just going to do a couple short sessions, but we'll be in the morning on Monday. But masterclass on Tuesday before we head into Christmas break. We'll still be live. I don't know. I don't really want to be live on Christmas Eve or Christmas Day. Honestly, I don't even want to trade. So I think it's fine. We'll talk about it next week. But new masterclass on Daily Profit Play is posted from yesterday. If you join the service, check out that masterclass. Actually, I will say this: we spent a lot of time yesterday on the current day's trades, and I still got into the full strategy. So it's a good class to watch. It's just I'm trying to think. I was in that session for maybe an hour and 30 minutes. And we probably spent 45 minutes talking about just managing the day because it was kind of a outlier type day. But it's just an important lesson of like real trading. It's real trading. It's live trading. Markets don't always cooperate. And so if you're better prepared for like the outlier events, it makes the winning days really, really easy. So it is a good class, even though it's like a lot of focus is on just the managing the day. But I ended up, washing the day's risk, which I honestly am pretty happy about. Okay. Thanks, Donna. Yeah, no, yeah, and that's correct. And then tomorrow, I'll make that a note here. Thanks, Blake, for posting that. So Friday, December 19th, no live session. I will not be live tomorrow. We have a flight at 6 a.m. out of Salt Lake City, heading back to the Midwest. We're flying to Chicago, driving like 3.5 hours to my brother's place in central Indiana. Hopefully trying to catch a tip off for my nephew's basketball game on Friday night. So no live session Friday. We'll be back on Monday, live in the morning. I'll be with Lance in the afternoon. And then it's Carter's big fat first birthday.
There you go, man. That's awesome.
Crazy stuff.
I'm getting the OG birthday come February, about 2 months from today.
Yeah,
So
man, you're getting the official day one.
yeah, day one experience.
Dude,
Well,
I hope you guys have a good a good experience in pregnancy. We had Carter was born at like 1 in the morning, I think.
oh,
I think my fiance was in labor for close to 30 hours.
oh my
It
God.
was pretty excruciating. I mean, it wasn't like I don't know. It is honestly, it's like all it made me realize is life is a miracle. I can't believe that women do that.
Yeah,
I
yep.
was there the whole time. Like I literally was with the it was like doctor, nurse, and me, and we're like coaching and yelling, and it was just like a crazy whirlwind of events. But it's a miracle, man. It's crazy.
It is.
And he looks a year later. It's like I know from 0 to 1, big changes. From 1 to 2, even more changes. So it's fun. It's I mean I've gone my whole life without being a father, and now I am. So it's your whole
Yeah,
world. It's pretty crazy.
it's a different reality, man. I
Yep.
just
So you'll
can't
love it,
wrap my
Blake.
brain around it, but
Yep, you guys will love it. So,
oh
all right,
yeah,
man. Let's run some daily prop play. Like
it's
I said,
fun.
check out the masterclass. If you're a new member, jump in there. Check out the new masterclass. I'll sprinkle in another masterclass probably at the beginning of the year. It's still our bread and butter. I love trading daily profit play. You know what I am curious of is by the time we roll back into like January 5th or January 12th, we are going to be back to market efficiencies. I can promise you we're going to have like 9 out of 10 days will be in the expected move, within the expected move, and we'll just go back to like what we typically do. But it has been kind of wild to see these last this last week or so has just been markets just kind of flowing, but I know it's less volume, I know it's less liquidity, and it's just kind of right into the holiday window where that's what the seasonality typically brings is like Thanksgiving to New Year's. Markets kind of just do stuff, and we're seeing that happen. So hopefully today at the end of the day is a nice net winner, whether it's 50 cents, whether I land a profit trap, I don't care. If we get filled on daily profit play, I'll update that. But let's just keep grinding. Let's finish the year strong, and have a good rest of the day, everybody. I'll see you soon. Thanks, Blake.
Sounds good. All right, brother. I'm firing this off.
Cool. This has been a zero DT strategy for the last 3+ years. There's always a risk of loss, and this trade is slightly higher risk than reward. But this is a trade that I tell everyone you have to be willing to trade through it, because what we will do is every now and then, like 1 in 10 trades, 1 in 15 trades, there will be a day that the markets do something really silly. And that's what's kind of nice is we shouldn't see a loss unless the market does something unusual or abnormal. Okay. But we have won 89+% of our trades with an average return of about 15% over the same day hold. So we're in today, we're out today. We don't have to worry about what Trump is going to say, what the Fed's going to do. What about the news this week? It's like we try to just set up and win the day. All the stuff news wise is basically priced in and baked into the markets. I'll get to that at the end, Kirk. Yep. Bear with me. I'll get to that at the very end. Okay. So, this is a great strategy. I keep telling traders, like, you have to be willing to trade through this. The reason why is because one loss is likely going to come with probably 10,